What's wrong with the sound? Can you hear me now? Yeah. So, anyway, welcome back, my friends, to the show where we drink questionable energy drinks, make questionable financial decisions, or at least we try to make them less questionable out there. So, Doritos, right? I was at the grocery store the other day staring at the glorious glowing wall of junk food. You know the one. Kind of a work of art, a symphony of artificial colors, artificial flavors. And there, in the center, a beacon of cheesy hope. Doritos. Maybe you like the blue kind better. The the ranch flavor, pretty tasty. But something was different this time. The price, it was lower. Not by a little bit. We're talking about by a lot of it. Like 15% lower. My first thought, this is probably a glitch in the matrix, right? We're all living in a simulation. But my second thought, maybe they finally realized that paying like $5.50 for a bag of glorified corn chips with a little orange dust on it, that's getting a little insane. But the real reason, so much more beautifully, cynically, wonderfully predictable in this whole thing. It turns out the price of nacho cheese Doritos and our ranch flavored cousins didn't just magically drop. It was a correction. A market correction, you might say. You see, for years, you, I, and a couple 100 million of other of us taxpayers here in the United States have been unwittingly subsidizing the nation's junk food habit through the SNAP program, or what used to be called food stamps. Our good friends at PepsiCo, which, PEP, they're the proud parents of Doritos, Lay's, Tostitos. They were enjoying a pretty sweet deal, you might say. They even spent a cool $2.8 million last year lobbying to make sure that their delicious, definitely not addictive snacks, definitely aren't not healthy, stayed on the government's shopping list. Because why compete when you can just get the government to guarantee you have customers and that they have plenty of money to buy your snacks, even if they aren't the most healthy? I mean, this is like the American dream, right, for a company. And I guess you might say the party's over. Well, kind of. Health and Human Services Secretary RFK Jr. got a group of 18 states to say, hey, you know what? Maybe we shouldn't use taxpayer money to buy sodas, buy candy, buy all that unhealthy junk, right? And just like that, poof, the subsidy on these snack foods disappeared. And what happened? Well, PepsiCo, in a move that I'm sure was just, pure, unadulterated generosity for all of us, decided to make its products more affordable. And affordable is that's the word they used, not we lost all our government funded cash cow and now we actually have to compete for your money, not just hook you on addictive snacks. I mean, no, affordability. That's beautiful, right? I mean, the free market, it in all its brutal, honest glory, finally showed up in the snack aisle, and it turns out the free market, 15% cheaper if you want to keep selling Doritos. Now, this isn't just about Doritos, though. This is a story about the entire economy. It's a little peek behind the curtain, a glimpse into how much of what we actually pay for things is actually completely artificial government spending. I mean, think about this. Where else do we see this pattern? I don't know, maybe college tuition? Back in 1965, the government decided to start backing student loans. Noble idea, right? Help kids get an education, get America into the higher education, business basically. And what happened? Well, since then, tuition has shot up 3 times faster than the inflation rate. A private university that cost you $2,800 in a year in the 60s now cost $85,000 a year. Think about that for just a 4-year degree, and if maybe you're not so swooped and it takes you 5 or 6, whew, that's a bill just for a standard bachelor's. And the New York Fed even found that for every single dollar that the government throws at student loan tuition, the actual tuition at colleges goes up by 60 cents. The universities aren't stupid. They know that this money is all but guaranteed. Maybe it is guaranteed. You just have to fill out a FAFSA form. So they just raise the price every year. Why not? It's profit, baby. And don't even get me started on healthcare. I mean, in 1965, the government paid about 31% of healthcare costs. Today, 64%. We spend almost $5 trillion a year in healthcare, more than any other developed country out there. And the results, same kind of story. The government shows up with a blank check and the prices just magically seem to rise. I mean, have you ever looked at the bill on one of these surgeries and seen how much healthcare costs? I mean, holy moly. So what does this mean for us, the savvy traders with some understandings of economics and a healthy dose of market skepticism? Can mean opportunity and some risk. First off, the risk. If you're invested in companies that are heavily dependent on government subsidies, you need to be paying attention. PepsiCo stock is actually rallying right now, which is kind of interesting, isn't it? The market seems to think they can weather this storm without subsidies. But what happens when the government decides to make affordable in other sectors, right? The defense industry with its $10,000 toilet seats or, $30,000 hammers, I don't know. The entire student loan industrial complex. These are industries built on a foundation of government cash. If we were to pull that out, the whole thing might get a little bit wobbly. The house of cards might, which straw breaks the camel's back, so to speak. But where there's risk, there's also some opportunities. I see a few big ones in here. Now, first off, we have private label and store brands. When PepsiCo has to lower its price, who benefits? The companies that were already competing on price. Store brands. I mean, the generic stuff that we've already been seeing a massive surge in buying on, they actually hit a record $282 billion last year. People are getting smarter. They realize that maybe you don't need $5 Doritos if you can buy the $3 store brand. It's a big difference. And the fancy packaging, the big budget commercials, they don't actually make the chips taste all that much better. So keep an eye on companies that own and operate big grocery store chains, the Walmarts, the Costcos, the Krogers. They're the ones that are going to actually laugh all the way to the bank as the whole thing kind of comes apart with SNAP benefits. Second, you have the health and wellness trend. This whole SNAP junk food ban is part of a bigger movement. People are actually tired of being sick and tired. They're looking for healthier options. The GLP-1s, the organic food. We get on the medicine, and then turns out that we want to eat healthier too. So you have natural ingredients, clean labels. This is a massive long-term consumer trend that's happening. Companies like United Natural Foods, Sprouts Farmers Markets, maybe Whole Foods, Amazon, even giants like General Mills are pivoting into organics and better food. I mean, these are companies that are hopefully going to be on the right side of history. They're not fighting against the tide. They're not trying to keep the junk food train going. They're riding the wave of the new consumer trend. And finally, the biggest one, maybe the meta investment here. This is about betting on the real economy over the subsidized economy. About finding companies that make things that people actually want and actually need at a price that they're actually willing to pay for without a government middleman juicing all the numbers. It's about looking for value, efficiency, genuine innovation, because in the end of the day, the government can print money, but it can't print value. And eventually the market always figures it out. So the next time you're at the grocery store, you see a bag of Doritos, think about the price and what it actually means. It's not just a number, it's a story about government, big business, the real cost of getting that bag of chips on the shelf, but taking your money too. And if you're started, if you're smart, it's a story that could make you a lot of money if you're savvy enough to take advantage of it. And that's the monologue for today. Sorry about the audio there. Briefly, this mobile setup, not it reset, reboot, and reconnected all the devices this morning. So that was a genius thing, and I'm just used to the machine always being on. So jumping over, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Let's hunt for some opportunities here today. Just a guy on YouTube, make predictions. Sometimes I get it right, sometimes I don't. I saw a goose in LAX. I'm in JAX. I'll be heading home later. So any of the trades that I usually put out today, Wednesdays, like Gold Rush, maybe it comes out timely, maybe it doesn't. It's about a 10-hour drive home. I'll be leaving Jacksonville here after the show, so bear with me. I'll try to get it out today. If not, I'll have something in the morning, I'm sure. So should be home tomorrow and back to normal. But this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any stocks, options, bonds, forex, futures, cryptos, treasuries. Let's jump in the charts, see what's moving, what's shaking. Dow, nice little pop this morning. Don't usually look at Dow, but hey, making records, baby. And just kind of sitting here just below the breakout level. Just below the breakout level. We had ES popping back up to the highs on this jobs revision thing. News on the streets, maybe it supports doing 2 or 3 rate cuts later in the year. And, since it pushed unemployment higher, the magical jobs revision to keep inflation under control kind of got revised out of the system. And like I say, those numbers are all made up. They're a bunch of bullshit. But we're sitting right here underneath the all-time high. This is the S&P 500 futures. If you've not seen this, I look at it because we don't tend to get gaps in the price. It trades 23 hours a day, 6 days a week. We're basically closed on Saturday. And otherwise, we're pretty much chugging along. Small gaps, but mostly filled in. If you go over here and look at the S&P, big gaps, all sorts of gaps. And that's missing price data. So I kind of look at the futures, get that price action filled in for me. Looking at NQ, that's NASDAQ futures right there. Same kind of story, but we're at a point that's much more treacherous here. We've moved down, we've retraced, we're at this 618 zone. This could kick off an absolutely beautiful correction that takes us significantly lower here. And if you take a look at the proportions, we have first moved down, a retrace to the 618, and a potential push right down here. Now this is at a kind of like a polar opposite of the Dow, the S&P pushing right up near the highs, trying to break out. And then we have Russell. That's a different story altogether. Now, while Dow was making all-time highs, Russell had already made all-time highs, gone into a correction, set itself up, back-tested the prior consolidation level, and has a setup to push on out to new all-time highs yet again, up here around 3,000, 3,100. So this is an interesting one. And if you have no idea how to trade Russell, IWM is the ETF, similar to SPY and QQQ for S&P and NASDAQ. Russell, potential to push on up higher. And if you actually, believe and look at the chart and you're like, that looks pretty good, you could trade something like an Ultra Russell without having to buy options. You could just buy some shares of this and ride it on up, possibly to 65 or 70. It'd be pretty spicy. And looking down here, let's see. Oil still chopping around in here. Above supports, below resistance, stuck in the sauce here, and potential to go lower. We have gold just sitting right below this resistance at the 618 here. The longer we hang right here, the more likely it is we drop. If we get below this low from last Friday, probably taking a trip down to the roadmap line. That's a healthy dive down. Another 1,000 points, $1,000 off of gold. Be careful on that one. Bitcoin is getting a retrace. And if we throw the fib line on it, we have the low in place. So let me grab the magnet. Low in place. Got the high in place. 618 support right back down here around 64. Want to see it hold there to push higher. The resistance is up at 92 right now. And we've kind of confirmed we're probably doing crypto winter for the next several months. So be careful on that one. Be careful going long crypto. It's probably going to be choppy. Even if we rally higher, it's probably going to be choppy and full of just nasty price action. Dollar is sitting right here on a retrace. So we went a little higher than I expected on the bounce. I primarily expect a dip to a lower low because we are underneath the roadmap line here. But at the same time, we have moved up, we have retraced, and we're sitting right above the 618. This gives us an upward bias, that upward target for, if we got continuation on this bounce right here, will put us right into the roadmap line one more time. And that would actually kind of make sense just a little bit, because that moved down, this retrace, that moved down, this retrace is starting to overlap, and that would make us like an ending diagonal to this whole thing. It almost make perfect sense that we see that kind of nasty price action to wrap up the bottom of the dollar. Now, NKD, global liquidity indicator, chugging on higher. 60,000 has been the target, and it may top out there. This could strike a temporary top. We could see a massive retrace off of that level. Be careful. And I would think it would probably drag the U.S. markets down with it if we see that kind of pullback. So keep an eye on that. So checking in on our Mag 7s here. Apple holding up really well. Still has that 295 target. Amazon still hunting for support here. And just chopping in here, sitting on the low. It may make one more attempt at that 618 level down around 195. You know, we have a 1, 2. This is possibly the 3. We could hang out with a 4, and we could one more spike down 5 before we bounce. It's has the potential to go higher, but how long is it going to take before it's ready to go? Hasn't done anything yet. It's just sitting there near the lows on this retrace. Google, it shot up, but chopped back down a little bit. I guess if we jump in and look at a little bit lower time frame here, we can see that the 4-hour roadmap line is a little bit lower. So if we get that continuation just a little bit lower, that would be kind of expected. We had the first move up here, and we have a 618 retrace. So if it holds right here, breaks back higher than this high at 331, we're probably set to move on up to that 385 level. That would be what I would kind of guess, but it's always, you know, as always, these charts and stocks can do whatever they want to do. I'm just kind of trying to figure out the most likely thing. Meta is on a path to go to 1100 to 1300 over the next couple of years. This keeps making higher lows, keeps doing the proportional 618 retraces, and keeps pushing higher. This is set to one of these. One of these is just going to be a big breakout rip. That's what it's winding up for. We got that move up, a retrace, move up, retrace, move up, retrace. It's just like winding it up, winding it up, winding it up. Eventually, the rubber band's going to shoot higher, and we're going to make a substantial run at that 1100 price target. Then we'll probably get some retraces as retraces and marginal highs as we chop into that 1100 to 1300 target. It could overshoot, but that's the target. Microsoft all the way down into That support, looking for this to hold a 618 on this little retrace we're working on right here. Here's the low, here's the high. There's that 618, looking for that to hold and go higher. NVIDIA, chopping around. 195 is the resistance, support down at the roadmap line, especially the daily roadmap line. If we get below these three lows here, coming on down to 150, and if we can't hold that, that's the breakout from last year. If we can't hold it, going on down further. Salah, Tesla, continuing the march higher. So far, the dip and rip prophecy that I foretold on earnings is holding true. Got to get up through these two highs. If we can make it on the upside of that, probably taking a bigger trip up into the 500s, maybe even up to 600. Netflix, yeah, look at that crappy retrace yesterday. So the trend has been down. We retraced up, a little pop yesterday, taken right back, and despite all this awesome job news this morning, Netflix being soft and has potential to come down to the 60 to 70 zone since we're underneath the support box. And now I go pull gainers, things moving up $2 more in the pre-market, put it on the gainers list, things moving down $2 more, put it on the decliners list, and we kind of hunt for some opportunities in the list, see if we can find anything interesting. Then I'll move on to, I've got like 19 setups that are set up for a potential entry today. We'll dive through those, see if there's anything good in there that looks nice. And then I'll wrap up the show today with some gamma predictions for where SPY and QQQ should end up today. And that'll kind of be the show. So stick around a few minutes. We'll dive through all the charts here and try to find some opportunities. Fix. Man, look at that thing rip. So 1600, I guess, next upside. VRT. Wow, what a pop. Holy guacamole. Right up to the 618. Be careful. If it's like other things in the sector, it's just going to keep ripping higher, but that is played out. 277 maybe above that, 301. But this is played out as far as all the targets I would go after. You know, we did set up the entry back here in mid-January, and we're right up through the target. So, boom shakalaka, if you got it. Book and or protect your profit. Have a plan. But it could keep running. All this stuff in the sector. GE Veranova didn't make it back down to the roadmap line and breaking out higher. So climbing the fib ladder, 861, 928, 1,000. Next upside targets there. VRTL, 2x long on VRT. Net. Watch for that one to, that's got lower highs written all over it. We're going to have to break above that prior high to get some upside going. And that's right where the 618 is sitting. We need a close above that to get the 277 target. Otherwise, watch out for moving on down. SNDK needs a retrace. This has just been straight up. We paused and straight up again, and we may see a retrace this size before we push on higher, but it could really use a trip back down to the roadmap line. Ferrari, get a nice bounce, probably coming up to the resistance at the roadmap line, and then we'll see what happens. Shopify. Ooh. It was popping overnight and then dropping right back down. It's a rejection of the roadmap line so far. We want to see it get on the upside to kick off the bigger upside potential. Gotta pull this down to the low. And we got to get through that roadmap line and the 618 to kick off that bigger 196 upside potential. Caterpillar, yeah, it just keeps rocking and rolling. This is basically a Trump trade. They talked about it in person, how Deere and Caterpillar basically just ripping on all this build back better, beautiful build, blah, 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 a lot of B's on all this, you know, basically government spending on, you know, nuclear and all sorts of stuff. So probably going to get a retrace here on MU. Be careful. If we got Nvidia talking about they're not going to give OpenAI the money necessarily, and then if they don't give him OpenAI the money, does OpenAI still buy the GPUs, and do they still need the memory? It's a whole circular house of cards. If there's a hiccup, this could come flashing back down to support pretty quickly. Excuse me there. ETN upside target 412 and then 426 above that. AGQ probably coming back, came back to the roadmap line. So watch this one. If silver continues the retrace to the roadmap line, AGQ is going to take another leg down. That right there is about 30% lower, and AGQ can take a step down another 60% or so. I would be a little bit cautious on that. It's 2x leverage ultra on silver. Goldman Sachs chopping in here, might get a retrace. Let's see, Seagate. Like I said, like Western Digital, Seagate, SanDisk, MU, all kind of looking better if they do a bigger retrace. LSCC, nice big fat pop that had no retrace, and look at that thing ripping. 100, climbing the fib ladder, 137, 157. If things get really spicy, you could have 283, but if we get up that high, be careful before we have a bigger retrace. Look at these big retraces. It's been known for, and we haven't had any of those since we made this low back in 25. So be careful. Watch out. GNRC, finally seeing a little bit of upside. We could get on up to 212, 217, maybe even 236 on GNRC. WDC needs a pullback. MDB, potential bounce, maybe, possibly, maybe. There's the high, here's the low. Has not gotten above the 618. If we do get the close above the 618, 465 is the target. But this, looking at the bigger picture, corrective type action with lower, it's kind of like a watermelon seed squeeze a little bit here. Lower highs, slight higher lows, and we could keep bouncing in here. So if we get below the roadmap line, probably coming back down in this vicinity, and then I just can keep going until we squeeze it on out. Costco was a good example of that. Did it for a good long while. Carvana, we were having a conversation about this company last night, how they've basically resurrected from almost the ashes. They almost went out of business and then popping right back. Potential roadmap bounce here. There's the high, there's the low. If we can get above that 618, right there around 438, we can see 512 on the upside. Absolute monster of a stock chart lately. TSEM. Yeah, watch for the retrace. CLS 257. Lumentum. That's due for retrace. AZN, AstraZeneca. I don't usually trade any biotech pharma. Don't usually. I seem to always pay the price if I do. Could come up to 218 off that last retrace. ASTS due for retrace. Retrace. Be careful. A lot of stuff kind of played out. This one probably coming on up to 400 on AMAT. TSM. There's the next resistance right there where we are. We could come on up to 437, 522. AVAV. Hunting for a low, hunting for a bottom. SMH. And we're above the resistance here, so be careful. Palladium. The question was asked, what one stock, if we had to, buy and hold one stock this year, what one stock? My original pick was JetQ, and They kind of threw that out like they were, the rest of the gurus panel didn't like that answer. But that's what I tell the kids to buy if they're gonna buy something and not really pay attention to it. I feel like you got to pay attention to these and revise your story. But another one that I might consider just buying and holding for the rest of the year would be palladium. I feel like it has this potential to go on up here around 370. It's been underperforming as far as metals go, and it may get more correction into further downside on gold and silver, platinum. But if it can hold in here, and we're actually gonna build all this stuff that we keep talking about, then palladium is an actual industrial metal that is very valuable. We'll probably see this moving on up. And the chart, PA1 exclamation point. And we got this almost breakout here, and then this was almost a breakout confirmation. Well, I guess it was, and then we retraced. But if we can hold support here, going on higher, 41.98 in the actual future, and that's like dollars per ounce. So pretty spicy stuff. Going from 1,700 to 4,100. So PALL would kind of be one of those picks that I would think would perform. If you're gonna play options, be freaking careful. And helium, like, it's really like most of our helium supply comes from nuclear, and we've kind of put a kibosh on the production there. So helium's actually getting to be a little bit rare, especially some of the new nuclear stuff doesn't produce helium as a kind of side production thing. So helium getting to be a little bit rare, running out of supply, and it's kind of an industrial, I don't know what you call it, industrial noble gas. Looking at CrowdStrike, needs to hold a bottom here and break back through the roadmap line. Not so sure we're going higher until we get the confirmation. TER needs a pullback. Could come on up to 420 or 440, 450 area, I guess, up here, 440. TDC, nice bounce. Still lower highs. Let's see what else we got here. Here's the high, here's the low. If we get the close above the 618, we could be on a path for 70 here on TDC. PPLT, platinum. This could come down to the roadmap line. This, platinum did hit the upside target. I was looking for 270. 170 was the target for a long time. We went ripping on through there, climbed the fib ladder on higher, and just like gold and silver, this is probably do a little bit of retrace. But if you look at the bigger picture here, there's that 224, 260, and if we get super spicy up here, all this kind of finishes its correction and goes on higher, we're talking about upwards of around 400 on PPLT, platinum, ALB. So this got through the 618. Got through the 618. Looking for this to get continuation. 417, possibly up to this 7 to 8, 900, even 1,000 area up here. And CEG. Potential for this to be done on the downside. Here is the high, here is the low, here is the high. And we're just kind of bottomed out right here. Looking for this to retrace back higher, get above the roadmap line, confirm that we've got a bottom in place, break back through the 618 price action up here, where we consolidated, and that would pull that 618 down. So yeah, when we get through the roadmap line, it's got a move up through the 618, but we still have to confirm getting through that consolidation to get 440 on the upside. So AEM, looking for potential retrace. Let's see. Let's just hit a few more of these potential interesting ones. Snow retraced, held the downtrend of highs. If this breaks back through the roadmap line, we're probably going to embark on a potentially much larger upside on snow. Oracle. Yeah, I thought we might go back to the bottom, get a little relief rally, but still due for a revisit of this low down here around 120. Bloom Energy hitting targets. Watch for the retrace. COHR. Watch for a deeper retrace. Z Scalar. Kind of warned that this breakdown can be pretty nasty here on Z Scalar. First move down, retrace, missed the low with the click. So that next move down could take us down in the 60, 70 zone if we get that continuation. And that's like 100 points down, like 100 points down. Yikes. Let's see, Johnson Controls, ripping. Data center supplies, Honeywell, all these major players getting in the data center supplies game here, and probably people are realizing these companies are gonna supply things for big buildings with lots of stuff. Kratos still hunting supports. And we got the last bounce, looking for support at the roadmap line for the next bounce. PNW. As long as we can hold this low we've got here, get back through the roadmap line, this has a very large upside potential cooking in here. And we're talking somewhere up in the 300 zone for the next move up. Amphenol. That one bounced. If we get through the 150 zone, 170, 180. And it could do the next big move up. EWI. SK Hynix, Samsung, memory, as MU gets out of the consumer memory, we need consumer memory for all sorts of consumer memory devices, devices that need RAM. And EWI has the main producers outside of MU. It's a potentially good way to play, and KORU is another is a leverage way to take advantage of that potential there. So EWI, South Korea ETF. If you go diving in, look at more about this fund. Click the button. You can see we got Samsung, memory producer, SK Hynix, memory producer, and some other companies down in here that you just can't necessarily get in the U.S. exposure. Like they're not in the U.S. market. So this is a way to get exposure to that sort of stuff without having to go dig into how to be able to trade in the South Korean markets. And let's see, that's a nasty looking chart. Leverage. NEM, Newmont, probably due for retrace here. Shante Gold, CCJ, that's due for retrace. ANET. Set up the run to 175, but retraced, and yeah. So the upside potential 175. The breakdown would be down here in a 95 on ANET. ALAB. Chopping. Hadn't triggered along, just still chopping on supports. LEU. Yeah, it's A, B, looking for the C down. Absolutely beautiful correction. Looking for that move down to 164. Humana keeps pushing lower. App loving. That's not a very positive chart so far. T-Mobile, still working on confirming the bottom is in place here. First move up, the retrace held the 618. If we can break through 214, 215 area, this is probably going to confirm that we have a low in place, at least for now. I'm going to set an alert there. If we can break up through, that'd be good for the positive side. R, rider system. Is this the trucks? Look for that to come back to the roadmap line again. Unity was getting punished on software and still getting punished. Does anything they do make a difference if AI can do everything they do? I don't know. Hood was down a little bit on earnings, but not a lower low. I had sold the 69 puts. Down a little bit, down 11%. Not crazy. And potential low already in place here. It may dip lower, but yeah. A couple of people, I guess one of the gurus saying that he thought it was because Bitcoin and crypto just dragging down Hood. I don't think Hood relies on crypto that much, but could be wrong. Maybe it's just a perception thing. VPG. Watch for that retrace. Mattel was rocking and rolling yesterday and getting a retrace today, I guess. Ooh, man, look at that. Trying to break out yesterday. Punched in the face today. Ouch. Guess it wasn't. Like, toys aren't all they're cracked up to be. That's potentially going to make a lower low. And that low right back there in March. April, I guess that was March, April last year. Failed breakout. That's still a downtrend. LAD. The unfortunate thing, I'm used to keeping up with all the news and the stories and what's going on. And in the last couple of days, Sunday, Monday, Tuesday, even today, I haven't been able to keep up with anything in the market. So that's the, several of you have been like, oh, we should, you should just travel and do these events all over the country. But when I do travel, I can't keep up with anything that I usually keep up with. So I do feel like I'm like flying a little bit blind here compared to the normal information that I digest for y'all. mRNA. Watching for that to come back down to the roadmap line. If we can hold it, could be on a correction, but we also missed the extension on the bottom side that I thought we would do. Duolingo. Can the AIs teach you to speak a little Spanish or a little German without apps like Duolingo? Or I don't know. Maybe we just have live translation, and we don't ever need to speak any other language. That'd be kind of crazy, right? ADSK, it's like the Star Trek communicator or whatever. Autodesk return to the bottom. If we can hold supports, potential to bounce here. Take two, getting punched in the face on the software flush out. Zillow Group. Whew. Yep, guess we didn't hold the lows. Didn't break higher. Going for the bigger, deeper correction. This could. Where's the low? We should be able to find support around 40 before we bounce again. ZG, Zillow Group. SN. Watch for retrace back down. Shark Ninja. That thing was on a tear for a while. Now it's struggling a little bit on, I guess, consumer demand potential. And TES continuing the correction. ABC. Absolutely beautiful correction. Support down at 114. SAIC. My family engineering company was a spinoff of SAIC. And it looks like we're still set to go lower, even though engineering for all sorts of, they basically do engineering for like nuclear projects and stuff. But hey, doesn't look the most spicy on that chart. So potential to go higher here. 200 targets. Lift. Punished on earnings. Gilead, Builders, First Sorts, just chopping in here. Yeah, that looks like a correction, and continuation would be lower, so I'd be careful on that one. All right, setups for today. Things that were set up with a potential entry for today. Hopefully there's still people hanging out here. Here's the high, here's the low. Entry, potential 189 upside. APLE. Here's the high, here's the low. Entry, 1290. I guess I could turn on some statistics for you. Nothing good there. Not many, nothing good there. APTV. This was already in the trade from back here on this prior bounce. Did a secondary bounce. Higher low. 91 upside targets. BLV. This is kind of a downtrend. Small little bounce. Doesn't seem like it's getting continuation. These are lower highs. I would be careful. That's kind of an indication it might fail. HR. Here's the high. Here's the, come on now. There we go. Magic popped on there. High, low. Entry, 1760 targets. Levi's. Oh, baby. I was bullish on this going into earnings. And I sold some puts down here. Didn't come down and get me. And I just kind of left it alone. Jack was asking me if I would go after it on, chase it on higher or just buy shares. I was like, no, man. There's looking like 23, and we could break on out to 26 up here. So clothing coming back around a little bit in a broader sense. American Eagle or whatever it was, ANF. What is it? Abercrombie and Fitch, I guess, was the one that kind of kicked off the sector, and now everything's kind of catching up a little bit. Nike also looks like it could catch up. 980 here on this one. Low price stuff, be careful. Under $10, under $20 really. Lilac, Liberty Latin America. Here's the high, here's the low. Entry, 949 targets. NXPI. This is an interesting one. Semiconductors. Doesn't have a long history, but here's the high, here's the low. Entry, 252 target. RNG. There's Sergio. Make it on your train, buddy. And there's the high, there's the low. Potential 33.95. SCHQ. Yeah. I would go after the bigger move here, and I don't want to see 32.50 for 33, but you could play the small move here, which will get you the target before we even trigger the bigger trade, because the 32.20, man, the numbers are really tight on that one. SKT just keeps bouncing but not hitting targets. It's already been in the trade back here for several months. Upside target around 35, and that's not the right SKY. Yeah, good, made the train. There's the high, there's the low, there's the entry. 102 on that one. TLH. There's the high, there's the low. Look for 106. TLT. I wouldn't touch that. That's still bearish. Here's the high, here's the low. Entry 1680 on target. VCLT just chopping. I wouldn't. I don't like that price action right there. And WMG potential to go higher here, but that was a lower low, so that's not an uptrend. And 32, 34 will be the target. Don't like the statistics there. So, all right, let's go check out some gamma and wrap this baby up so I can get on the road. And let's see, SPY. Let's see what we got here. Come on, load, baby. Load, baby, load. Let's check it out. What we got? What we got? What we got? Well, we hung pretty tight yesterday. Look at that. We stayed right there and then decoupled right into the close. Yesterday was just a day. So today, let's check it out. Bullflow.io. Okay, on the cues, let's go back to SPY. Let's see what we got cooking. Good looking. So 700 still. This is interesting. So the big level hanging out at 690, and that's like a magnet. We had a big level hanging out here for Friday. It's kind of cleared off a little bit. So it was down at 685, I think it was. We had this like pathway that looked like we were going to come down, but this other bubble that was going higher. It looks like down might be the path. So I would watch out. We could come down here and visit this 685. So I'm going to go top of the bubble around 700. One, and the bottom of the bubble right now down at 685. Pop this up. Top of the bubble 700. That's kind of what we've had. And the bottom of the bubble 685, which is going to pull it down just a little bit. Right there. That's the range I kind of expect us to hang out today. The kind of level I expect us to hang out at. Let's kind of look at the balance here. Golly. Where do we balance the purple and the yellow? We've got more. Let's see. Interesting. So there's actually, it's pretty balanced between now and later in the month. But the puts are heavier later in the month than they are today. So we may actually see a push to rip some of those calls. So we can see a push down at 689 maybe. This is more art than science here, but oh, I need to not move the bubble, but move the, I'm gonna say like 689 on SPY. Looks like we may be cruising on down there. So sorry if you're hopeful for a breakout today. It doesn't look like we're gonna do that. And the cues, where we play for the big money. The beer, I mean, the big money, the beer money, the small money, right? Let's go back, check out the gamma chart, heat map, pop on the cues. Maybe I should have just started there since I already had it up, but refresh, reload, and not much cooking here. Whew. 618 and 606. That big one way out there. It's not even on the monthly. That's kind of weird how it's at the end of the month. So 606 and 618. Let's go with pull this down a little bit, 618, and pull this down a little bit to 606. And it's, you know, this thing could get out of the bubble pretty easy. Let's see what we got cooking on cues. And let's see, where's the big level's out to the 20th. The more players out there on the 20th. And not much, there's not much planned this week, so be very careful here. Something's about to happen. I just have this like uneasy feeling about the way all this is shaped up in here. That's cool. Highlight a bunch of stuff. Uneasy. All right, level for pinning. I'm gonna go with like a 605. 608. 608. I said 606 was the bottom of the bubble. That's why I'm like, let's go with 608. So looks like we may get some flush out here and then maybe try to hold the bottom of the box. If we don't hold the bottom box, things can get ugly here pretty quickly. And if it's a big down day, be careful if you do the beer money trade. I'm going to be on the road, so I don't know if I'll get it put on or not. Yeah, maybe at a charging stop. I don't know. We'll see. But have a great day out there, everybody. I'll be back, same bat time, same bat channel tomorrow. Hopefully back in the normal office environment. And we'll get back to normal. So, back to normal. That's all right. Have a great day. We'll see you later. Thanks for coming. Bye for now.